Hello everyone, welcome to part 3. In this video, we are going to be talking about other types of taxes that a taxpayer may encounter, starting with the net investment income tax. So like the alternative minimum tax, the net investment income tax is targeted for the higher income taxpayers. And what this tax is it requires high income taxpayers to pay a 3.8% tax on the lesser of net investment income or the excess of modified AGI over the threshold based on their filing status. So net investment income is defined as any interest, dividends, annuities, royalties, rents, passive income activity, any net gains from property disposals. So all of those added together, and then minus any allowable deductions related to those items just listed. For the modified AGI thresholds, the threshold for married filing jointly is $250,000, $125,000 for married filing single, and then $200,000 for all other filing statuses. And several of these notes can be found on page 3 of the tax rates and schedules packet. The next set of taxes we will talk about are the FICA taxes. So we'll talk about them in terms of taxpayers employed by a company. And then on the next couple of slides, we will compare them to self-employed taxpayers. So for taxpayers that are employed by a company, the FICA taxes, so it's Social Security and Medicare, the total percentages are 12.4 for Social Security and then 2.9% for Medicare. So what happens is the employers pay their employees. The employer pays for half of that Social Security and Medicare. And then they withhold the other half from the employee's paycheck. For employees, they also are subject to a 0.9% additional Medicare tax on any salaries or wages in excess of $200,000 or $125,000 for married filing separately, $250,000 for married filing jointly. For Social Security tax, there is a wage limit to that. So you'll pay Social Security tax up until you make $176,100. Once you make more than that, the Social Security tax stops. If an employee has multiple employers during the year, it is possible for that taxpayer to pay an excess amount of Social Security and Medicare tax. And when that happens, the excess of those taxes can be refunded. When we compare the FICA taxes to the perspective of a self-employed taxpayer. So a self-employed taxpayer is the employer and the employee. So they are responsible for the entire 12.4% of Social Security and the entire 2.9% of Medicare tax. The FICA taxes are referred to as self-employment taxes for self-employed individuals because the calculations of those taxes are based on their self-employment income. And so the way those taxes are calculated is we take the tax base, which is their net earnings from self-employment. So usually you would see that as the net income on the Schedule C. And then we multiply it by 92.35% to get our tax base. And the reason why it's 92.35% is because while they are responsible for paying the entire FICA tax, so the full 12.4% of Social Security tax and the entire 2.9% of Medicare tax, they are allowed an implicit deduction for the employer's portion of those taxes. So that's, if we divide each tax by 2, that's 6.2% for Social Security tax and 1.45% of Medicare tax. So then when we add those two together, that gets us 7.65%. And so then when we subtract 7.65 from 100, that gets us 92.35. So then once we have our self-employment earnings, that tax base, the net earnings from self-employment, then to calculate the other taxes, the Social Security tax is 12.4% times the lesser of the net earnings from self-employment, or $176,100. So that same $176,100 limit applies to the Social Security tax. For the Medicare tax, we calculate that as 2.9% times our net earnings from self-employment. And the additional Medicare tax, so this is just considered the additional Medicare tax. It's not part of the FICA tax or the self-employment taxes. But that additional Medicare tax is equal to 0.9% times the greater of 0, or the net earnings from self-employment minus whatever the threshold is based on your filing status. So for most filing statuses, that threshold is $200,000. For married filing single, it's $125,000. And for married filing jointly, it would be $250,000. It is also important to note that if a self-employed taxpayer has net earnings from self-employment that are less than $400, then there is no self-employment tax to be calculated. Additionally, if there are taxpayers that receive both wages and self-employment earnings within the same year, both sets of earnings are subject to the same Social Security earnings limit of $176,100. And so then something that we want to think about is how how that limit is applied if a taxpayer is receiving both kinds of earnings. And so what happens if a taxpayer is in that situation is their earnings from being an employee, those wages will use up that Social Security earnings limit first. And the reason why is because by letting the wages use that limit first, that is actually favorable for the taxpayer. And it's because it allows them to use the limit when it is taxed at 6.2%. So that's the employee side, instead of the full 12.4% if they were self-employed. So let's look at an example that demonstrates this concept. So in our example, we are going to assume that Courtney received $100,000 of taxable compensation from EWD in 2025, and she received $180,000 in self-employment income from her consulting activities. What amount of self-employment taxes and additional Medicare tax is Courtney required to pay on her $180,000 of business income? And we are to assume that Courtney's employer correctly withheld $6,200 of Social Security tax, $1,450 of Medicare tax, and $0 of additional Medicare tax. So where we will want to start is our Social Security tax. So to calculate the Social Security tax, we will need to find our net earnings from self-employment, and we want to consider that $176,100 wage limit, because the smaller of the two of those numbers is what's going to be multiplied by 12.4%. So if we look at the employee tax base, so looking at the taxable compensation from EDW, if we look at what that tax base is, so $176,100 is the limit for the Social Security base. And the problem mentions that Courtney received $100,000 of taxable income. So we'll want to back that piece out. So then our Social Security tax base limit minus the employee compensation that was subject to Social Security tax already, because they told us that Courtney's employer correctly withheld Social Security tax, that amount becomes $76,100. When we look at our net earnings from self-employment, so that's the number we're comparing to, our net earnings from self-employment is the $180,000 from the consulting business multiplied by that 92.35%, and that gets us $166,230. So then, to get the Social Security portion of the self-employment tax, we want the smaller number that was calculated between the taxable employee compensation number and the net earnings from self-employment. So in this case, the smaller of those numbers is the 76,100, and that is what gets multiplied by 12.4%. So then when we do that math, so here we have our Social Security tax times 12.4%, and we're gonna round it to the nearest dollar. So then that gets us $9,436. For our Medicare tax, the Medicare tax we talked about is calculated as 2.9% times our net earnings from self-employment. So take our 2.9%, and we calculated our net earnings from self-employment. I'll actually label this too so we have it. So this is our net earnings from, and I'll abbreviate self-employment as SE. So we take our 2.9% and then multiply that by 166,230. And that gets us $4,821 in Medicare tax. Then to calculate the additional Medicare tax, additional Medicare tax, a little sub step we'll have to do first is we'll have to add the taxpayer's compensation and net earnings from self-employment together. So the compensation, I'm going to come off to the side over here. The compensation was $100,000 because that was the amount from EWD. Make that look more like 100,000. And then we want to add the net earnings from self-employment of 166,230. And that gets us $266,230 there. Then, to continue the calculation for additional Medicare tax, we want to multiply 0.9% by the greater of 0 or the sum of the taxable compensation and the net earnings from self-employment minus the threshold based on the filing status. So here, the threshold that we are using for Courtney's filing status is 200,000. So if we subtract 200,000 from our little sub step that we just did, that gets us 66,230. And so then if we compare that to 0, 66,230,000 is greater than 0. And so that is what we will multiply by the 0.9%. So then if we take that, 66,230 times 0.9%. That gets us $596. And then one more step that we would want to do is we would want to take our additional Medicare tax number of $596 and subtract any additional Medicare tax that was withheld by Courtney's employer. And so if we look in the fact pattern, we see that Courtney's employer withheld $0 of additional Medicare tax. So then our additional Medicare tax in this case is still going to be $596. So then, whenever we add all of the pieces together, the total amount of taxes that Courtney is required to pay is $14,853. So that answers this question here. And how this 14,853 is broken out is 14,257 of that is related to self-employment taxes. So that's $9,436 in Social Security tax, $4,821 in Medicare tax, and then the rest is the $596 of additional Medicare tax. An important topic to consider for a taxpayer is whether or not they are an employee or an independent contractor. And this distinction is important because the classification determines what level of taxes they are responsible for. And so it's important to make sure that the classification is right. So that way the taxpayer, whether they are an employee or an independent contractor, is paying the correct amount of taxes, as well as the employer too, to make sure that they are classifying their workers properly. So then that way the company is withholding the correct amount of taxes as well. The distinction between employee versus independent contractor is taxpayer specific. There's not really like a one size fits all kind of thing. But things to think about to help answer that question of what that taxpayer's status is control. So who has the control over how the work is performed, when the work is performed, and where the work is performed? So some other things, or I guess other sub-questions that kind of help answer that primary question is, who is setting the working hours? Does the taxpayer work part-time? Do they work for more than one company? Is the taxpayer realizing a profit or a loss? Are they allowed to work somewhere other than the employer's premises? Are they able to perform the work without heavy or frequent oversight or training? And so all of those questions can help determine the taxpayer's employee or independent contractor status. And the reason why that is important, and again, we talked about that distinction being important because of the amount of taxes that would be paid. So employees, they are only subject to half of the FICA taxes because their employer pays the other half. So 6.2% Social Security tax, subject to that wage limit of $176,100 for 2025. 1.4% Medicare tax, and an additional Medicare tax of 0.9% on salaries or wages above the limit based on their filing status. Whereas independent contractors, since they are self-employed, their income and expenses would be on the Form 1040 Schedule C. And since independent contractors would be kind of the employer and the employee, they are subject to that full 12.4% of Social Security tax, the full 2.9% of Medicare tax, and any additional Medicare tax of 0.9% on their net self-employment earnings above the threshold for their filing status. And that self-employment tax base, again, is based on 92.35% of net self-employment income. And that is because they are allowed to deduct the employer portion of the self-employment taxes paid for AGI. Another thing that we had talked about when we were talking about deductions is unreimbursed business expenses are not deductible. So that would be like something an employee incurs. However, self-employed individuals, so independent contractors, they can deduct expenses related to their business activities as for AGI deductions. Additionally, after considering the limitations for it, self-employed individuals or independent contractors, they may also claim the qualified business income deduction if they are allowed to do so. Additionally, if a taxpayer is an independent contractor, they are not eligible for certain benefits that employees get, such as health insurance, retirement benefits, and other types of benefits. Whereas an employee gets those things, for the most part, from an employer. And then also, independent contractors are responsible for paying their tax liability throughout the year because they do not have that luxury of having an employer that withholds taxes throughout the year for them. So at the end of the year, an independent contractor is responsible for making sure that their tax liability is settled at the end of the year. All right, that is it for part 3, and I will see you guys in part 4.